This is James Altucher at the Street.com TV here with Jim Cramer. Jim, back in the late 90s, early 00, a big strategy that everyone played was buying any IPO, riding it up. It was a great strategy.
Right.
After that 2001, 2002 period, I would never touch an IPO again. It's just like shell shocked. I can't do it. And so, but you regularly talk about IPOs on your show, and I'm just curious, how do you evaluate now an IPO? Because when they come out, aren't they more or less like fully priced, like everyone's already in them?
Well, I think that's you actually hit upon the issue, which is pricing. See, I look for IPOs now that are duds. I mean, the others
so they come out and then they fall?
Come out and they fall, or no interest, because the no interest means that it could garner interest.
But could you get a Vonage that way?
Well, no, Vonage went up high and then, and then went down. I'm looking for the opposite, frankly, which is price low.
Okay.
With no interest, like an IPO that's 11, 13 range, and then stays there. That would be a gift. I mean, I think that we talk about it on Mad Money. What we're looking for is like if you can get the 100 shares, sell it, which is kind of our emphasis on Mad Money, which is don't stay in the deals. But there will be periodic deals where it just seems like there's a level of pessimism that is unwarranted, and some of the best IPOs I've ever seen start out as duds. Not duds from the point of view that they open up and go down, but duds from the point of view that there's no interest.
Well, look at Google. They kept lowering their price. They went down from, I think, 130 to 80 before they opened up.
And Google I remember being on radio in L.A. During the decline. And initially when I started it, the talk was 120 to 110 at the beginning of the week. And I said, boy, I think that's expensive. By the end of the week, it was at 80. And I just said, listen, I don't know anything about Google, and in fact, I really love it. And everyone who's listening to me on LA Drive Time should go buy a share. And it was just funny because it was the pricing that drew me toward it.
And then it opened up around like 90 to 100. But then there was somebody on another website, not thestreet.com, that said they would eat their hat if it went to 100. It hit 100 like a day or two later. I don't know if they ever actually ate the hat.
One of the things that I'm hoping we can develop, and this is something I tried to do when I started thestreet.com but had poor success, was to catalog the big wrongs so that we could bring up the big wrongs. And I'm focused on this right now because had you listened to Bill Gross 3 weeks ago, he would be saying the following. We're in a major bull market for bonds. Now, I'm going to just do sleight of hand here and consider them stocks. We're in a major bull market for stocks, and if you could buy a treasury at 90, it might go to 120, okay? Meaning if you bought a stock at 90, it could go to 120. Then he switches direction and says basically the stock's going to go to 85. And he's the biggest holder of the stock. So you have to believe he's dumping the stock. It's not like he's saying...
Or he already did.
Or he's already did it, right, and wants to look right. And I think that people misunderstood that bonds these guys are like stocks. And it reminded me of Jim Glassman. Jim Glassman says Dow 36,000, and then it would be like he turned around and says, no, Dow 10,000. And I don't like this because what it says is instead of just listening to the man and deciding, ooh, you got to do what he says, I think that there should be a credibility issue. That if you switch so quickly, maybe your initial analysis was quite wrong. And if that's the case, maybe the person's advice should be discounted. We tend not to discount people's advice in our industry even after they make big mistakes.
Although one might argue, though, that a market is different than a stock. So Bill Gross is talking about bonds in general, and that has to do with all the recent economic data coming out. Whereas a stock, you can sort of say the value shouldn't really change that much from one day to the next. You say XYZ stock's worth $200 a share. It shouldn't be the next day it's worth $50 a share. It's going down. Right. But whereas a bond, bonds.
Do you think the winds change?
Therefore? Yeah, and I'm not saying I disagree with what you're saying, but it just might be a different.
Well, let me point out that the big issue is the Dow 36,000 side of things, not the switch of minds. Like, it's just inconceivable to me that he was making that call to begin with. It was just so wrong-headed. I don't know empirically how we ever got to this, to long-term rates 3%. Yeah. There wasn't anything about that call that was coincident with any piece of data. So suddenly when the data looks less like the data, but the data should never have gotten us to 3%, he switches and says the same, data that's not that different in my case, that I believe is not that different, takes it to 5.5 or to 6. And What I am saying is that was he disingenuous? Was he just being a blowhard? And what I'm more concerned about is why should we trust him as much as we did beforehand? That's what I'm getting at.
Well, there's always the argument maybe he was just trying to sell books, which is your point that maybe he wasn't being, sincere in the approach. Now, it's an interesting thing also with bonds and stocks. Like, I think people think bond investors are somehow more intellectual,
right, absolutely.
And maybe Bill Gross still keeps that credibility sheen.
It's a patina.
Yeah. So, it's an interesting thing. But Dow 20,000, when do you think it gets hit?
Well, Dow 20,000 is difficult for me because I have a philosophy of just making it for the year. And the reason I just say it for the year is because that's about as far as I believe I can see. I have some stocks where I believe that I could make a forecast for. But when I look at the Dow, and I always do it from bottoms up, there's a lot of stocks that I can't forecast beyond a year, so I don't try. And maybe that's ducking it, but I don't know many people will actually stick their neck out for a year either. So.
All right, well, this is James Altucher and Jim Cramer talking about bonds, stocks, the Dow, everything.